Hey, it's Soleil, and this is episode 263 of the Orange Pill Investor. And today I want to talk about insurance. I just watched Quant Bros 7.75, I think it was, whatever the hell the decimal is at this point. Um, and it reminded me of a couple of things, but one is when I was a broke sailor, when I had only been in the Navy for like a year, I sold life insurance for about 6 months, and that shit was brutal. Uh, like we would we would cold call people just out of the phone book and go door to door in frickin' apartment complexes in Washington D.C. And yeah, that shit was wild. But it was actually uh, a small minority owned marketing firm. I was literally the only white salesman. There was one white girl that was like the secretary or whatever. And I literally got introduced like this. It was like, this is Soleil. He's good white people. And I thought that shit was hilarious. I think I'm probably try to get that on my tombstone. You know, he was good white people. Um, but that aside, I loved what Jeff was talking about with the insurance market, and of course Ben has talked about the convertible bonds and all of that. And I think the point is that MicroStrategy doesn't just have the best asset known to mankind, which is Bitcoin. They are able to repackage and repurpose that and offer a customized product that is literally flying off the friggin' shelves. They can't. They have these over convertible bond offerings, and they're always oversubscribed. And I forget who was talking about it being the right of first refusal. So even when these things convert early, these guys are like, I got dibs for the next one. And there's a couple of things that I don't want to forget to talk about, but I think it goes to the point of when Michael Saylor was trying to explain to Saifedean about yield, and Saif was only thinking about it as his own personal self. Like, why would he take 5% quote unquote risk free yield when he can just hold Bitcoin and get 20, 30, 40%? And it just wasn't sinking through Saif's head that there are customers out there that are begging for products and they cannot stomach the volatility. They can't stomach the volatility that earns you the right to make 20, 30, 40% returns. So, MicroStrategy is able to just give the customers a compelling product. And it was something that I thought about when I was listening to, there's a guy named Stephen Mark Ryan, and this is Tesla related, but I watch him for my daily Tesla hype, just so that I can keep second best kind of at least in the back of my mind and not be completely forgotten about. But he was talking about electric vehicles, and somebody was saying, oh, electric vehicles, there might not be enough demand for the Model Y or whatever when they come out with this cheap vehicle. And his point was that, and I'm paraphrasing, was that if you make a compelling product, it's going to sell. And the reason why a lot of the demand is falling for these other electric vehicle companies is because their product is not compelling. And one thing that we can obviously see from MicroStrategy's, uh, convertible bond offerings is it is a compelling product. And there's going to be no shortage of companies looking for exposure to Bitcoin, and the only way that they're going to be able to get it, or the best way that they're going to be able to get it, is through MicroStrategy. And Jeff was talking about Bitcoin's going to be the best um, collateral for insurance, and we're talking about banks being able to custody Bitcoin, and we're talking about it was great when we got the Bitcoin ETFs, but I don't know who has more money, the banks or the insurance companies, but it's got to be pretty freaking close. So for the insurance companies to enter into this market is got to just be anything but bearish. Like it's good news. So let me just read my notes here real quick and make sure I'm not forgetting anything that I wanted to talk about. Oh yeah. So one thing when I would go to these sales meetings, we had sales meetings on Friday nights, which seems crazy. But there'd be a bunch of 20 something, 30 somethings in a frickin' sales meeting on a Friday night instead of out at the club. And it was in downtown DC, and we'd get out of here at like 10, 11 p.m. at night. And it was like at 12th and L, I think, in DC. So there'd just be like 300-pound hookers walking the streets when we came out of these meetings. But uh, that wasn't the point of the story. That was the most fun part, but that wasn't the point. The point is that at one of the sales meetings, I remember them talking about the perfect product. If you're going to have a business, what kind of products make good offerings? And one is a consumable. So food or something that you're going to use, and then as soon as you're done using it, you have to buy it again. And even better than that was insurance, because it's renewable. And you buy life insurance and then you just keep paying for it forever until you fucking die. So um these convertible bond offerings, I guess they're more consumable than renewable, but with the way that these people are, want dibs on the next one, even when they convert early, it almost kind of seems like it's just going to be a renewable resource until somebody comes up with something better than Bitcoin, which isn't going to happen in my lifetime. These things are just going to be chained one after another. Um, and the only limit is the amount of debt that MicroStrategy can safely service. And it's going to be crazy. So selling insurance sucks. Maybe talking about it is not as exciting as it could be. But I actually thought I might be an actuarial scientist. Math and science was my best subjects in school, and it was either be a doctor or be an actuary. Ended up not doing either one of those. But the last thing that I want to talk about is, so not only is MicroStrategy able to customize products for potential customers, because of the volatility that they're creating, they're actually customizing every single investment product that people are looking for. He's talked about it in a couple of his videos, but he said he used to get mad when people would short his stock, and now he's just like, hey, the more the merrier. It's basically just creating markets, it's creating volatility, it's creating interest. And so the people who want to just buy and hodl, they can buy MicroStrategy shares and hodl, and just sit around and wait for a number go up. The option sellers like myself can run the wheel. We take probably limited upside, so we might not profit as much as the hodler. If we do it strategically, could potentially out outdo the hodlers, but is not guaranteed. And so he's creating the volatility and the high implied volatility that an option seller is looking for. He's also creating the volatility that a call buyer is looking for, because if someone can buy a call when implied vol is low, and then the price spikes and implied vol spikes with it, then they can profit from the direction of the move as well as an increase in volatility, which is going to pump up the price even more. So they're able to sell these long calls at a greater premium than they would with the same dollar move in another stock. Um, People who want to just DCA into it, as, lo- as long as it's a bullish strategy, I mean, I'm attracted to it. But even the short sellers, I mean, I guess there's a point. I don't know how people I don't know how people figure out whether something is a good short or not. But I guess if you're a sniper and you can figure out when MicroStrategy has a blow off top, good on you for trying to figure that shit out. But the only thing that I would say is I kind of have to look for those moments myself. And the way that I look for what might be good opportunities to sell volatility is looking at the implied volatility chart. So this was the pump when MicroStrategy was $50 a share and went to $200 a share. That's post split prices. This chart does not measure the value of MicroStrategy. This is the implied volatility of MicroStrategy over time. So we have kind of this baseline of implied vol, and then holy shit balls, the price went up. I think the MSTR like doubled, and then it tripled, and then at some point it quadrupled around in here somewhere. And when there's a spike in implied volatility, it has a tendency to revert to the mean. So anywhere in here, if I had been watching this chart, would be a time when, maybe it makes sense to enter into a covered call trade. And then the call seller profits in two ways. Either the price, goes down, which it actually ended up doing. It hit about 200 a share, and then corrected back down to 100. But it also, as implied volatility starts to revert to the mean, it's collapsing, which means the call prices are decaying slightly. Probably shouldn't use decay because that's theta, but the implied volatility numbers are reverting to the mean. So the call prices are decreasing for two reasons. The price of the stock was decreasing and implied volatility was collapsing. So that means that I was able to sell calls here high and then close them out for less than I received. So I checked this chart, and I'm waiting for the next oh shit balls moment when MSTR goes, 200 to 400 in a couple of weeks, and then 400 to 800 in another couple of weeks. Something like that would be nice. And it's good for the day traders because the price is up and it's down and it's up and it's down. And I mean, day traders know how to day trade, I suppose. I mean, I don't really know. I got wrecked on my zero DTE calls. And I think I was pretty specific in that post that I feel comfortable talking about call selling and, to a limited extent, call buying from an option seller's perspective. But I think I was pretty clear that this zero DTE bullshit is not only extremely risky, but I'm not even good at it. Like, I don't even have any experience with it. Running momentum trades is not my bag, but I am trying to learn. It is kind of fun. But I think what the lesson that I learned from Friday was I took like 50 positions. They were real cheap. and I kind of laddered into the profits. So I only sold 10 at double the price. I think I bought in at 24 and I sold 10 at 48. So I doubled up on those, but the other 40 just, the price petered out. So I made a little bit of money to here, but then the price just never really got back to where it needed to be. And I think what would have made more sense was if I bought 50, then I should have sold 25 of them at a double. And then when that popped, then at least the worst I could do would be break even, because I would have sold half for double, and that would have basically got me back to zero. And the worst I could do would be to break even. So I will probably, next time I try a momentum trade, I will probably give that a shot. But even then, there's no guarantee. Like if I bought them here, there's no guarantee that any of them will fire. So I could still just lose it all. But I think that'll be a little bit of a better laddering strategy for trying to get out of that trade. But again, I don't know what the fuck I'm doing. So just watch for entertainment, please. And look, I'm a self-taught options trader. I just watched hundreds of options videos. I mean, probably 1,000 hours at least of tasty trade, videos and research and all kinds of different things. A bunch of the best YouTube channel I think is In the Money, Adam, and then also Kamikaze Cash has a good one. Theta Gang Strategies. But yeah, so I'm just a guy. Like I I touch things to see if they're too hot. Like you might not want to listen to me. All right, so I think that's it for now. MSTR is has the hottest new products on the planet, and it's gonna be a wild ride. Not financial advice, of course, but I have never been so bullish as I have since I participated in the True North first episode. I just went back and watched it just to kind of critique myself and the group, and we were pretty fucking good, if I do say so myself. But yeah, I mean, if anybody's got comments or suggestions, or you think we sucked, have at it. Let me know, and I'll take those criticisms to the group. All right, be good, Joe.